Hi, I'm Brian Duncan, a local realtor here in Virginia Beach and Little Neck area. And this is a real estate market update video to cover the Little Neck area specifically. It's February 2026, and I'm going to cover a lot of stats to give a summary of what we saw last year in 2025, and then give a little bit of insight into what we expect going forward into 2026. So let's get started. I'm going to go ahead and share my screen, and I'll talk about some of the stats for last year, and then we'll go from there. All right. So the first thing that I want to talk about is sales prices. And some of these charts I have going back 10 years so that you can see the trends over time. So this goes back to 2016, and you can see obviously prices have gone up quite a bit. And in my last video in August, I talked about this slight dip here in Little Neck. It doesn't mean that values went down. It just means that lower price homes sold that year, and then prices have continued to steadily increase. And we need to ignore this at the end here for year 2026 because we're only 6 weeks into the year, and so we don't have enough data to really make any sense of that yet. All right, so let me switch to price per square foot. So this is the sales price per square foot, and you can see over this amount of time that it has just constantly gone up. Even in 2024, it still went up despite the average, or I'm sorry, the median prices went down. And if we look at the raw data, we can see in 2023, it was $259 a square foot. Then in 2024, $287 a square foot. And then last year, finished out the year at $295 per square foot. So that's important to see that and not just look at just the prices. So next thing we'll look at are just the number of sales. So we can see that over the last few years, we've had less homes selling. This is not a surprise mainly because of rates have been so high that less people have been moving. But the truth is we've had plenty of buyers too in the marketplace that have purchased those homes. All right, so if I look at the raw data, last year we finished with 126 sales. The previous couple of years, it was just around 102, so it was above the previous 2 years. And looking at 2022, it was 139 sales. So again, we're at a decent number. There's certainly still more buyers that would like to buy. And then again, we're not going to pay attention to this number here in 2026 because we're only 6 weeks into the year. All right, so the next thing we'll look at will be, let's look at the months of inventory. All right, so inventory is going to show us how long it would take to sell through the listings that are on the market, okay? Assuming no other listings came on the market, how long it will take to sell through these listings based on how many buyers have been buying over the last several months. And that gives us an indication of the health of the market and whether prices are going to be going up or down. You can see right here since 2020 that it's been less than 2 months worth of inventory, and that's a very strong seller's market. It's still that way even in 2025, and so that tells us that prices have been going up. Prices will continue to go up, and in fact, the normal is 6 months right here, and we haven't had that level of inventory in several years, and prices won't go down if and until that ever happens again. So if we're at 2 months, we would need triple the amount of listings that we're getting on the market every month before we have a balanced market. Okay. So this year I expect values to continue to rise just like they have been, and they probably will for several years. Okay. Now the next thing we can look at will be let's see, original price to final sales price ratio. Let's look at that. So again, for the last several years, that's hovered right around 100. Okay, it's no surprise. Sometimes as high as 102, and sometimes as little as about 98. We can look at the raw data, and this breaks it down by month. And if we look at last year, most of the last year averaged around 100% of list price. There's a couple months where that was lower, and I'll point that out. So January, a year ago, the median sales price ratio was 97.5%. Then in April, 98.7%. June was 102.7%. And then the rest of the year was 100% with the exception of November, which was 97.7%. So sellers are still getting very close, if not all of their full asking price. And that's true. It's been that way for several years. Okay. Now let's switch over to mortgage rates. This week, Freddie Mac has said the national average for a 30-year fixed rate mortgage is 6.09%. Now, this chart below it goes back 3 years, and if we look currently, that's where we are. And that's the lowest that we've seen other than fall of 2024, about the same. But it's been that way since 2023. So currently, well, actually, here's the peak. October 2023, it was 7.79%. That's the peak, and it's been lower ever since then. Okay, so as we continue to see declines in the interest rate, that's just going to fuel the market. Okay, it's just going to continue to fuel the market. All right, I'm going to stop sharing my screen here. All right, so I showed you the interest rates, and that's a very important thing. I think we've experienced, interest rate lock where people feel kind of trapped in their current house because they're at a, anywhere from like a 3 to 4, maybe 4.5% rate. And if they want to buy another house, they're going to have to jump to 6. They're going to have to double the rate. And if you want to buy a little bit bigger house, maybe you want an extra bedroom or a little bit bigger yard or a larger garage, all these things are going to, cost more. So if you're going up on the value of the house by $100,000 or $200,000 and you're doubling the rate, that's just not feasible for most people. So we're still experiencing that rate lock-in effect. But as interest rates decline and the current rate and the market rates get closer and closer together, as they get closer together, it makes it more feasible for other people to start to move. And of course, you always have the big changes in life that always cause people to move, like a death in the family or divorce or a job relocation, things like that. Military moves are big in this area. So all those are still the main reasons why people move and will sell the house. And, until the rate gets closer to where most people are currently, that I think we'll still have people that are going to stick tight, going to stay put, maybe expand on their current house, maybe put additions on. And I think this year we'll see more of what we saw last year in 2025, which is, limited inventory. I think it's going to be competitive for buyers. That's why it's important to have representation and advice. It's important to do the right things at the right time and the right order to give yourself every advantage to getting your offer accepted, especially when you want to live in a very specific area, like right here in Little Neck. All right. And then if you're a seller, it's also important to maximize how much you're getting out of your current house, because you're most likely going to be moving somewhere else and you'll need that money to invest in your next property. So that's also important to get some advice, find out what kind of maintenance and upgrades you can do to your current house to maximize the value, and then to market it and prepare it so that you can maximize how much you sell it for. So hopefully this info was helpful to you, and I will post other updates throughout the year. I usually do this 2 or 3 times a year. So if you know anybody that would benefit from this information or might be interested, please share it with them. Be sure to like and follow, subscribe, follow along. And if you have any questions, you can always reach out to me directly, and I can give you stats and input on not just this area, but I can research any areas of Virginia Beach or Hampton Roads, and I'm happy to share that with you. So once again, thanks for tuning in. I'm Brian Duncan, local realtor here in Virginia Beach. Have a great day.